Today is Tuesday, July 12th. I want to take a look at the big picture here. This is the S&P 500 in a monthly chart. I want to talk about analogs. Now, analog is really a comparison of one chart today to another point back in time. And you're looking for similarities in shape and corrections, ebb and flow, that sort of thing. Now, a lot of debate over whether they're valuable. Different conditions can be in existence and during the two time periods, and trying to make a comparison of it works once and then it should work all the time, which of course is not very statistically correct. But let's take a look at what we have here. We have top of the bull market, 2000, 2007. These are cyclical bull markets. And here we are today. You can see a sideways motion, and if you squint your eyes, you can see a breakout to new highs. All right, bear market lows, big correction in 2011. Other wiggles. Here's the currency crisis in 98, and this is the rotational bear market in 1994 when bonds really took a hit, and of course the crash of 87. So now let's go back in time, and this is pre-labeled, of course, to save some time. Here's where I think we are in terms of the analogs, how you line up the highs and the lows. So these are pretty easy over here. 2000, 2007, bottoms of the bears in 02 and 09, correction in 11. You can even see a little Brexit blip there, an analog at the end of this box. And of course, going back in time is a little fuzzier. You could label it any way you like. But the point is that this is a secular bear market, and I think this decade, or the last 2 decades, have been a secular bear market as it went sideways with cyclical bull and bear markets in the middle. So now I'm going to bring a chart in from the outside. All right, this chart was done a couple of years ago. Actually, looks like it was done in 2013. What we have here is a history of the Dow going way back into the beginning of the previous century. You can see a bull market going in here, the bear market after the major crash of Black Friday, another bull market going into the bear market of the 70s. And you can see a bear market can be sideways, not necessarily down. Bull market going into the 2000s, and then the expanding triangle, if you will, of the Dow into this current millennium. Now the thing about this is that they're pretty much 18-year cycles. 18-year of bull, 18-year bear, and it seems to be repeating. And if that's the case, and the bear market started in 2000, we've got another year or two to go in the current secular bear market. So that's how I'm getting the thinking here, this analog. So let's put this chart away. Oops. All right, back to our analog. So if that's the case, I would say that we have this big decline ahead. Now, I really thought that once QE stopped, we would have already gone way down into here, maybe last year or this year. Obviously, that's not happening. Still is time for that to happen, but we have to go with what the market is actually doing. And this seems to be, from an analog point of view, a pretty good path. So a little bit more rally here as the market sucks in willing bulls because they can't get yield anywhere else. And then some sort of surprise where it sends the market way down. This analog does not have it going down to the old lows, just a pretty steep correction, and then up from there for possibly 18 years. So there's an analog view. Believe it or not, take it for what you think it's worth. But I do think that it's still premature to call a secular bull market in effect.